All right, everyone. Well, thank you so much for joining us this afternoon for our webinar series here to talk about the future of franchising. And first off, thank you again for just being patient with the start time here. We did have a small, just unforeseen circumstance that kept us from getting things started on time, as we've experienced several times with live events. Even though they are done virtually or remotely, they still have hiccups that come up along the way. So thank you again for being here. The focus of today and the presentation we'll be going over is really taking a look at a recent report that was published by the International Franchise Association and FranData, where they put together a report giving and providing a detailed overview of the state of franchising and what that's going to look like for 2022. A small recap of 2021, where it looks like most of the data for 2021 is still not confirmed 100%, but it will give us a snapshot. So that's where this information will be coming from. It's called the 2022 Franchising Economic Outlook, prepared by the International Franchise Association and FranData. So I will go ahead and jump in and share my screen here to go through this, and we'll go through it together. As I like to say, at least for me, when I attend things like this, these are situations and things that I intend to go through and review, but maybe I don't always get around to it. So from a personal level, I like going through this. If you have any questions, comments, concerns, things going through, these tend to be relatively small to moderate sized groups. So feel free to raise your question. We can have small talk and conversation as we go through this. So with that, I am going to share my screen and we will get this started here. Here it goes, screen share. All right. So let's go ahead. And so this is what the report looks like. And we'll start going through each of the sections this is about. And I will zoom in, by the way, so you don't have to go through all of this. But this very first chart in overview, I really like. It talks about franchising continues strong recovery. Franchise had an exceptional year in 2021, and 2022 looks to be another strong year of recovery. So let's take a look at some of the data here. Well, franchises GDP contribution to the overall economy will remain stable at 3% in 2022, but the growth rate will likely slow to 5.7%, still higher than pre-pandemic level, to a total of $501 billion. Employment forecast is supposed to grow at a slightly lower rate of 3.1% to 8.5 million jobs, a net gain of 257,000 jobs. So let's go ahead and just take a quick look down here at what we're looking at. So you have 2018, 2019, 2020, 2021, and 2022. So 2021 is estimated, 2022 is projected. So it's showing that the total number of establishments here projected for this coming year for 2022 is expected to increase from about 775,000 to 792,000 total establishments, which is a growth rate of approximately 2.2%. And something I always like to take a look at here is, where were we in 2018, 2019? That's why I like this chart here. And you can see 2019 for total establishments was 773,000. So you see 2019, big fall off, 2020, a bounce back in 2021. It literally almost went down and then almost back to where we were in 2019. It was kind of what 2020 and 2021 felt like. It was like a drop and then kind of getting back to where we were and now rolling forward. So that's what it certainly looks like based off of these numbers for total number of establishments. And that's a critical driver for all of us. The more units in franchising that this number continues to grow, the better it is for all of us in franchising. So we see that growth rate is slowing, to be expected, but it's still a healthy growth rate. And then we have our employment numbers to show how many people are being employed at franchise establishments. And we look at 2020, about 8.5 million people, and it projected in 2022, we're going to be really close based off these projections back to pre-pandemic numbers for total employment. So certainly, again, a driving factor to this. And I think I look at it in a certain regard. If you think about what happened in 2020 and into 2021, you may have had some seasoned franchise operators and units that were running and decided to close that had many people employed that were older franchises that maybe had been operating for a while and just decided they didn't want to go through it. I know I ran into clients and prospects that we spoke to during that time period that many of them just decided we're going to just close. Early retirement for many folks that they weren't necessarily planning on. They're just poof, gone out of the labor force. And so then those jobs were lost. And then we had many new brands or new franchisees get started and open. And generally speaking, it takes time to grow. So it would make sense that we kind of see this employment lagging behind total establishments as we're waiting for these franchises that were sold maybe in 2020 and opened in 2021. And now they're starting to mature in that second or third year of operation. As those locations or establishments start to mature, now we start to see increased employment to occur in these location. So I just wanted to take some time and talk through that. I think that's a really important thing to make note of as you're thinking, why is employment maybe lagging so far behind? And you can see about a 3.1% growth rate. Let's take a look at output. Output is for 2021 estimated in billions of dollars here. This is $787.7 billion in total output by franchise establishments across the United States. So in 2019, it was 794. So we're pretty close back to that. Excuse me. And certainly we have a new nemesis that's arrived, and that's the significant inflation that's occurring. So certainly the 790 billion in output there is going to be a little bit different for 2021 and 2022 versus 2019 and 2020 there. So just to take a look at that, but a huge growth, which you would expect after the 2020, it was 16.3% growth rate for output. And then projected output for 2022 is 4.9%. And then we have GDP in terms of billions of dollars. So economic GDP generated through gross domestic product. If you're not familiar with that term, it's at almost $475 billion for 2021, which exceeded, or right about even, I should say, just over, but basically about even with the 2019 numbers. And you can see that it's projected to be over $500 billion in 2022. So just taking a quick look, I really love this summary page because it gives us a lot of information to be thinking about. And so if you're in franchising in any vein, any way, shape, or form, by all indicators here, 2022 is looking extremely positive and looking for some high growth. And if you've tuned into our franchise sales and training monthly franchise sales and marketing review that we go through, certainly you're well aware of our the number of new startups that are happening in the United States is it's a boom right now. Over 40% increase for 18 months in a row. I mean, just a huge increase in number of new startups since about right around, I think it was August is where the data shows, August of 2020, when that all really got started there. So anyway, just some things for you to be seeing and thinking about. And that growth rate, by the way, for GDP is 5.7% growth anticipated over 2021. So just big numbers to be looking at and information to be thinking about and what's coming down the pipeline here. We'll take a quick look at industries here. Okay. Next, we'll take a look at franchise establishments by business line. So depending on you, maybe for your own business or maybe clients you work with or just being in the industry, where are we seeing some growth? Is there any projected contraction? So let's take a look at the percentage by category for projections in 2022. So we're going to look at the far right column, and then we'll be comparing the percentage change. So for example, we'll just start with this first one, business services. Let's look at the growth rate in terms of number of establishments from 2021 to 2022. So business services is projected at a 1.4% growth. Commercial and residential services is projected at 2.7% growth rate. Lodging is projected at 1.3%. And what's interesting with lodging, you see here, it's fairly stable in terms of growth, and total number of units is higher than pre-pandemic levels there. Then we have personal services at 3.1% growth. We have quick service restaurants, 2.1%. So I know there's been some concern about the food industry or even lodging about what's happening. Is this a good time? Is it still going to grow? And look at this, 2021 was a 2.6% growth. 2022 is projected at 2.1% growth. And, getting back closer to those, it's projected here, quick service, 192,000 total units compared to let's see here, that was 2018's number, 194, almost 195,000. So it's getting closer to that 2018 number of establishments. Real estate is projected to grow 2% this year. Retail food products and services projected to grow at 2.1% this year. And take a look at retail establishments. Retail, what's interesting, if you think about retail food products and services as a whole, even throughout the pandemic, that never contracted. The number of establishments it actually grew in 2020, 2021, and now 2022, projected at another 2.1% growth rate. Pretty interesting. Full service, table and full service restaurants projected at 2.5% growth rate. And it looks like by the end of this year, we'll be really close to the total number of establishments back in 2018. So it shows that overall 2.2% growth. This is some regional trends. I'm just going to read some highlights here from these yellow diamonds, bullet points. It says the Southeast region has the largest franchise concentration in the United States, with an estimated 231,500 total establishments by 2022, employing 2.6 million workers and contributing $235.9 billion in output in the U.S. economy. The top 10 states for franchise growth in 2022 are projected to be Texas, Florida, Arizona, South Carolina, Idaho, Texas, or Tennessee, North Carolina, Montana, Nebraska, and Nevada. And living in the Southeast here, that it's not surprising to me that it's the leader for total number of establishments. So you can see this by projections. So here are the top 10 states. So if you're saying, well, what are some great states for me to be considering to expand into? Well, these are the states that the IFA, the International Franchise Association, and FranData are projecting to increase. So let's just take a look at total number of establishments by state. So Texas is projecting to grow at 3.7%, Florida 3.3%, Arizona 3%, South Carolina 3% growth, Idaho 2.9% growth, Tennessee 2.9% growth, North Carolina 2.8% growth, Montana 2.5% growth. What is that? Nebraska 2.5% growth, and Nevada is at 2.5% growth. So very interesting to see these 10 states here for you to take a look at. So if you're in an executive, a leader in your franchise system of any kind, well, these are the states you might want to be looking at in terms of where the opportunity lies. And then you can see the growth rate here for total employment, as well as franchise output being ranked as well. So each of these states are growing and are great opportunities. If you're a franchisee considering where should I maybe open a franchise, might be worth, depending on where you're located, what state you're in, if you're willing to relocate, it might be worth considering relocating to one of these states mentioned here, based on just the growth that's coming through. So I'm going to scroll down this report here to take a look at. We're going to scroll down to some macro trends on this report. Okay, so here is the chart to show the state of franchising by region. So we'll look at this map. I think this is a nice overview here. So let's take a look. We have the Northeast. We'll start and we'll just go east to west, top to bottom, kind of a structure here. So we'll look at the Northeast first. Establishments, they had 121,533, employment 1.26 million, and output of 1.43 billion. The Southeast has 231,000 plus establishments. The Midwest has almost 170,000 establishments. The Southwest has, which is really only 4 states, which is interesting to think. In just 4 states, the Southwest makes up almost 113,000 establishments, not that far off from the Northeast. And then we have the West, which accounts for almost 157,000 establishments. So when you look at saturation, opportunity, growth, where are things happening, this helps give you a quick snapshot here of what that looks like. Okay, here are the top 10 states. It's just neat to see them on a map so that you can see where are these states geographically located. And what's interesting, if you look at most of these, they're in between kind of the Rockies and the Mississippi is where most of them are, kind of in the center of the country there. And then out on the east side of the country, we have predominantly they're all located in the Southeast. All 4 states are in the Southeast. So Southeast, Southwest account for 6 out of 10. And then you look at kind of this mountain west to kind of the Mississippi, you have 6 states in that grouping as well. So just some things for you to think of and to take note of. Let me scroll down. I want to take a look at some more macro data in here quickly. Okay, so in 2022, they're anticipating inflation is likely to decelerate. Supply bottlenecks and labor shortages will gradually dissipate. Fingers crossed on that one, right? I know the supply chain is really, really impacting businesses everywhere. It might be a toss-up in terms of kind of gripes or challenges I hear from clients where they're talking about either the there we go. We'll pop back to this. Sorry about that. Where they're griping or their challenge is related to either staffing or supply shortages. You know, those are really, really the 2 big things that I consistently hear. Let's take a look at employment and wages. So wages are in 2021, franchise workers saw a wage increase on average of 9.2% in increase in earnings, plus 4.7% in hourly earnings. So wage and salary was 9.2% increase, and hourly went up almost 5%. So you can see this growth here, and for 2021 on this chart, pretty interesting to see. All right, we're going to click down here. This just shows employment by educational level and attainment, and it shows that most categories here, this line here is a 5% unemployment unemployment rate here, and it looks like basically every education level is at or under that 5% threshold. So pretty interesting to see there where folks are in terms of hiring and employment. And we are going to click through and scroll down a few more pages. Consumer confidence. I like this one here. All right, let's take a look at our consumer confidence level. So this is showing in January of 06 on the far left, 07, 08, 09, 10, 11, 12, 13, 14, 15, all the way. So from 06 to 2022, January of 2021 is here. So you see this huge drop in consumer confidence. index here, and it bounced back up here in 2021. It dropped again mid 2021. It's on the rise again. And so we can see what's happening. And you can see the huge fall here in 06, 07, 08. And remember, remember what happened here, 08, 09 with the real estate crash, and really dropped consumer confidence very, very, very low comparatively to what happened to this one. And not saying one is necessarily worse than another, but it's just interesting to see the consumer sentiment and confidence there and what they're seeing. So just some important things to note. U.S. household wealth in billions of dollars. We see this we see a drop and a dramatic increase here over the last 2 years. So it's really accelerated significantly. It looks like it may be starting to show signs of leveling off in 2021. We'll see what 2022 brings for us. And then certainly the big concern here is the inflation rate and the massive concern of what's happening. And you can kind of see here the inflation if you look back in 02, if this chart starts all the way back in 2001, and you can see this inflation rate slowly starting to increase and peaking here right before the real estate crash. And then bam, it tanked and dropped down. We had a negative number here for about a year. And then inflation kind of increased, kind of stayed. If you look at this kind of, it bounced back a little bit and maybe showing a slight decline here. 2015, it dropped down and then a rise, and then this huge spike here in the last 2 years. Certainly, largely, that driven when government spending is increased as much as it is, it's going to create inflation, and so we'll see how long that inflation lasts for. Hopefully it curtails sooner rather than later, so that we can get that stabilized for all of our sake, and getting that going. By the way, I mentioned previously for franchisees that are operating or that are looking to purchase into a franchise, just as a quick reminder, was in regard to the inflation rate, it's important to consider reminding prospects when they're coming through your system or pipeline that inflation is erratic right now. It's extremely high. And it's something that they, as a prospective franchise buyer, if they are going to buy, it is absolutely true that every day they wait, every month they wait, inflation is eating away the dollars in their bank, the dollars that they're planning to get for this. So the dollar that they were planning to invest yesterday is worth less today. And so they need to be thinking about, if they're going to do this, they need to move sooner rather than later so that they can get in and get this going. And just for the sake of the value of their own dollar at the rate at which is going. And again, it's not, the point is not to create a scare tactic. I want to be clear on that. It's not to create a scare tactic. It's really just to help them make a decision. Even if they decide not to, they at least made a decision. If they decide to do it, then this will help support them and help them in their investment into the franchise and starting up a franchise model, business. And this is just gross private domestic business investment. So you can see a huge drop in 2020 on the right side. So this dates back all the way to 2006 on the far left, billions of dollars on the left side here, or on the vertical axis here, and then go horizontal. We've got 2006 all the way to 2022. It looks like or the end of 2021, I should say. So you can see this investment here where it's at. Looks like it's been pretty steady. You can almost kind of see the line here. Here are these green bars kind of showcasing what's going on. So the green is total investment, and then the orange is growth rate. So you can see the drop here in 08, 09, steady rise, some little dips, and a huge drop in 2020, and then a pop back up here. So it's looking like total investment is getting back to about where it was in 2018, 2019. So we'll see how that goes. The point of this is that private investment is back, and it's investing and it's doing things now. So just be aware of that. That means and we've seen it in franchising, acquisitions, investments, things are happening in the franchise community for sure. We're seeing that happen. And then this is just monthly total business formations, which I talked about. And you can see this huge spike here of activity that's been going on. This goes all the way back to 2006. And you can see this a spike here, 08, 07 into 08. And then it dropped way down, a spike here in 2013, which is interesting. And then a steady rise. And you can see here in this kind of part, it's been pretty stable, right around this, in between 24,000 startups. Huge drop in 2020, and then look at this spike, and look at that. I mean, it's just been incredible, the number of new business startups happening. And what does that mean? Really, what that means is these startups, people are starting their own independent. Some of them are starting franchises. All of this ultimately leads to, if you are a B2B business, a lot of potential prospects just came into the market. So depending on what your service is, you have a lot of folks that are going to be potentials for you. And it also means there are a lot of new businesses, which means people are sorting out what it's like running and starting a business. So those are the key elements that I was hoping to talk about. One thing to note here, we can take a look at this, just the mortgage rates here. So you see this uptick this is from 2019 on the far left. This is the orange bar at the top is 30-year fixed mortgage rates. So it was about 4.5% in January of 2019, and it fell down. And in January of this year, it popped up for a 30-year mortgage to just over 3.5%. So still, even though it's showing it comes back as a consumer, still just really, really low historical rates for lending in that regard. But just something for you to see as the Federal Reserve continues to increase interest rates, which they should be, to help curtail inflation a little bit here. But as those interest rates go up, it does affect mortgage, and that will affect lending and how that's going to impact with banks, lenders, and with franchisees coming into your system. So just be prepared that coming down the pipeline, I could see in 2022, 2023, as rates continue to increase, that lending is going to continue to, let me see here. Did they have the mortgage or housing market index? Yeah, no, I thought there was another chart in here. Okay, so that is what I had to share with you for our presentation today. I did not plan for that to be exactly a half hour, but it worked out that way. So thank you all for attending. Are there any questions that maybe we can address, talk through, or share with you regarding the information we talked about, or something else you might be interested in? Feel free to type it into the chat box, or use the raise your hand feature, and I can unmute you, and we can go through that. All right. Well, seeing that I don't see any comments coming through, thank you so much for being here. Happy March. It's already March of 2022, folks. So now's a great time, by the way, to review your quarterly goals for first quarter, because that is coming to an end here pretty quick. So make a mad dash the last 4 weeks of the month or of the quarter to really look to get those wrapped up. Thank you for being here, everyone. Have a great rest of the day and have a great weekend.